Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Wednesday, May 26th, 2021, and I'm pre-recording this Trading Places Live for Thursday, May 27th. Futures currently are just slightly higher this evening. We'll see how we open on Thursday, but we did have a nice day on Wednesday, so maybe we'll get a little continuation, a little follow through. That's what I would be looking at, especially based on what I'm seeing so far with futures. Um, Today's show, I'm going to go through the agenda with you first. We'll start off with that daily market recap, as I always do. Get into talking technically. I'll show you a couple of RRG charts there. Industry analysis. I'm going to go through and point out a few industries that have either pulled back or maybe on the verge of breaking out. So just a couple of areas, several areas that you might be interested in. Then we'll get into the earnings spotlight, where a number of companies reporting after hours tonight. Earnings, for the most part, are mostly lower, though, even though most of the earnings came in better than expected. We'll go through those, and then we'll wrap up the show with the three you must see. Before we get into any of that, let me take you over to earningsbeats.com. Those of you who are new to Earnings Beats, love to have you sign up for our free Earnings Beats Digest newsletter. Simply type in your name, email address, hit that subscribe button. We'd love to have you join. It's a newsletter that I publish 3 times a week, Mondays, Wednesdays, and Fridays. They typically, these articles are typically sent out around 8:30 Eastern. So normally before the stock market opens, you should have your copy. There's no credit card required. You can unsubscribe at any time. I think it'll, would serve you well as an educational piece. And then there's also some opportunities to trade some of the stocks that we talk about there, but we focus mostly on earnings, relative strength, things of that nature. Moving back to the market on Wednesday, did have a really nice day. I mean, overall, maybe it didn't seem like it, but we've had a huge move. So consolidating and making a move up or continuing to move up in the case of the Nasdaq, I think that's a real positive. We're seeing a bit more consolidation on the Dow and the S&P, but that's okay. Dow Jones Industrial Average up 10 points on Wednesday. S&P 500 up about 8. Nasdaq up 80. So on a percentage basis, up about 0.6%, tripling the percentage gain on the S&P, and Dow mostly flat. Mid caps and especially small caps had big days, though. Mid caps up almost 1%. Small caps up more than 2%. So really good action. All the AD lines, accumulation distribution, all moving higher with this action. So I think this is really bullish action. I don't see anything on the horizon here really ready to upset the apple cart. I do think we'll continue to get reports out about inflation. So I think that will help to serve as reasons for folks to sell from time to time. But I really don't believe this inflation is going to amount to anything. I think this will be probably a 2, 3, 4 month story. And then I think it goes right out the window. And I believe the market's going to still move along with interest rates that are probably higher than where they are now, but I don't think they're going to be tremendously higher. I think we could move up, maybe challenge 1.9, 1.95% here over the next month or two. That would not surprise me at all. But if you look at it from a historical perspective, that is still historically very, very, very low interest rates. And when you combine that with the type of growth that we're expecting, GDP is out in the morning. I'll talk about that in just a second. But strong growth and low interest rates, that's really nirvana for equity markets. And I think that's what we're going to be set up with for the balance of 2021. Looking beyond the major indices and into the sectors, discretionary up almost 1% on Wednesday, energy up 0.9%, and communication services up about 2/3%. Those were your three leaders. The big one that I was watching was, actually, there were a couple of them, but one, communication services. Could we get the breakout? We went up, we tested that high from April, couldn't get the breakout. Discretionary stocks just trying to get back through the moving averages. And I really think this 173 to 175 area is going to be pretty big from a gap, gap resistance perspective, and then also trying to get through these moving averages. So watch that closely. I do think eventually we break out, but just when we break out, I think, is really going to be dependent on how quickly we can get through these key areas of resistance. To the downside, healthcare. Healthcare was weak, down about 0.6%. We did fail at the end of last week trying to get through 125. I think that set us up for some short-term weakness. There is a negative divergence in play, lower PPO, higher price action. So it's possible we see a little bit more weakness here with healthcare, but I think we're going to break out in healthcare just as we've been doing in other areas of the market. Looking at the industry group level, renewable energy up more than 5%, nearly 6% on the day, and also closed with some gusto above the 20-day EMA. So this is a group maybe that's poised to put in a bottom. It could be a left shoulder, neckline, head, and maybe we make a run all the way to 250 to put in the right side of the neckline. That's something I'd be watching for. If we do, then a pullback to test the moving averages would potentially set up for a very strong advance from there. Renewable energy, after taking a really big hit earlier in 2021, does look like it's at least beginning to carve out a bottom. And that's really important technically for the longer term. All right, let's move on to the 10-year Treasury yield. I will say tomorrow on Thursday, we got a number of economic reports out. April durable goods expected to come in with a rise of 0.7%. March rose 0.5%. So looks like we're going to step things up a little bit. But when we strip out transports, March was actually up 1.6%. That's expected to drop to just 0.7% in April. So transports there having a bit of an effect on expectations. We'll see what happens when the numbers come out in the morning. Q2 GDP, second estimate, expected to come in at 6.5%. The initial estimate last month came in at 6.4%. So GDP continuing to expected to remain very strong. Initial jobless claims last week, 444,000. We've been seeing this number steadily decline. Tomorrow morning, we're looking for 450,000, which is a slight step up from last week, but still very low on a comparative basis to what we've seen over the last several months. April pending home sales will be out at 10 a.m. in the morning, and they're expected to climb 2%. March rose 1.9%. So home sales prices definitely continuing to strengthen. That's a good sign for the economy. Excuse me. All right, let's move on to talking technically. The first thing I want to do is just point out the S&P 500 remains in this really solid uptrend. We had a negative divergence, and you can kind of see back in the end of 2020 and early 2021 as we kept going higher. See how we struggled with that PPO? And then finally, we did go down, hit the 50-day. PPO got close to the center line, had one more move, pulled back, sideways consolidating. You can see we got that PPO center line test. From there, we have rallied really nicely on the S&P. Beautiful move up back in March and April as we headed into earnings season. Since then, we've done mostly sideways, mostly consolidation. But notice that negative divergence. We had higher prices, lower PPO, and we've gone back to the center line or close to the center line on the PPO, and we've tested the 50-day. So I think right now we're just simply consolidating. I think the next breakout will be a very good one for the S&P. And as I've been mentioning, the stock market loves this time of the year. May 26th through June 5th has been a very bullish time historically, where the S&P 500's annualized return is more than 32% over these days since 1950, while the NASDAQ has annualized returns over 48% during this period since 1971. So definitely the, history at least supports the market potentially making a run for another breakout here. All right, let's talk a little bit about the RRG. If you're not familiar with the RRG, what it essentially does is it allows you to compare different asset classes, different sectors, different stocks against a benchmark. So in this case, I'm going to use the spider as the benchmark and take a look at how the diamonds, which tracks the Dow Jones, the Qs, which track the NASDAQ 100, and then the IWM and the MDY, which track the small caps and the mid caps. How have they all been performing relative to the spider? And I'm going to compare them using one caveat, and that is we're going to start back. You see this right here where it says 5 weeks ending November 9th. So November 9th was when that positive vaccine news came out. So all I had done was drag this over back to that November 9th period. And what I'm going to do now is I'm going to drag it forward so that you can see as we move forward what areas, how these different asset classes are performing relative to the spider. Now, when you're over here on the right side of this vertical line, this is telling you that your relative strength is good. You got a really solid relative strength. You're outperforming. When you're on the left side, you're underperforming. Now, this horizontal line here, this is the momentum. So this is looking for, do you have strong momentum? If so, you're going to be above the line. And if you have weak momentum, you're going to be below the line. So just putting this into perspective very quickly, what you want to see are areas over here strengthening into the leading quadrant. Anything that's moving in this northeasterly fashion is telling you that not only are we strengthening in terms of momentum, but we're also showing relative strength. So excellent combination. Now, sometimes really healthy groups will go through a period where they consolidate. When they do, they tend to weaken in terms of relative strength, and they tend to weaken in terms of momentum. And then a lot of times they'll turn right back up and go into the leading. So that's some of the things that we look for. Now, the opposite of what I just talked about, moving in southwesterly fashion, is very bearish. And a lot of times you'll see just temporary pauses and then move right back down into that weakening quadrant, that lagging quadrant. So let me just go through here and just show you how these different groups have been performing. So IWM is your small caps. That's the Russell 2000. MDY is your mid caps. QQQ, this is the NASDAQ 100, and here's your Dow Jones. And this is just telling us how these different groups are performing relative to the spider. So you can see all the way up into January, and down here is where you can see the period. So now we're into January of 2021. That'll continue to change as I drag this forward. And so there's the IWM and MDY moving into weakening. And you can see the QQQ. This was back on March 22nd. Remember the growth stocks in the NASDAQ really starting to take a hit? Watch what happens to the QQQ here as you go through. See how we're completely falling apart? Small caps, mid caps also falling, even though they're just in weakening. And the big companies, the conglomerates on the Dow Jones, actually moving into leading. So pretty solid action here. And then just over, and now this is through May 10th. So now look at what's happening here over the past couple of weeks. You can see the QQQ turning back up, the Dow turning down, and then MDY and IWM continuing to weaken. But as I mentioned at the open today, the IWM had a really strong day today. Now, this is a weekly analysis. So one day isn't making a huge impact at this point. But if we continue to see small caps do well, what you'll likely see is this start to turn back up toward the leading, and mid caps, which are not nearly as weak as the small caps right now, also could turn up. The NASDAQ, what we want to see is move back through that improving and into the leading. But we have to see how things evolve from here. I just wanted to show you where we're at right now in terms of relative performance. When all four of these are over on the left side of the chart, that tells you the spider, the S&P, is the strongest of the groups. Now, the next relative rotation graph I show you is the S&P, but this time with all of the individual sectors on this chart. So you can see back in November, again, we're back at November 9th. Look at where energy was. Everything else kind of pretty close to center. Energy was just getting crushed. Then the vaccine news came out, and watch what happens to energy. Now, when you get a lot of these different tails, a lot of these different sectors or whatever you're comparing, when you have a bunch of them on a chart and you really want to focus on what's happening with one of them, you can come down here and just click on this and it'll highlight it. And it just kind of fades the other ones out a little bit so you can really focus on what's going on here. But let's just take a look from November and watch the XLE. Now, one of the things, if you follow the RRG and if you follow Julius de Kempenaar, who's the creator of the RRG, one of the things he talks about is the power of these long tails. This is telling you that you're having a really powerful move back to the upside in terms of momentum. Relative strength, we haven't crossed back over yet, but momentum has really picked up here. And this is through December 7th. So this is just after 1 month of the positive vaccine news. But watch energy just absolutely explode into the far right-hand side of the chart. So we went from November till now from way over on the left side of the chart, way underperforming the market, to way over on the far right-hand side, way outperforming the market. And now as we continue growing, you can see XLE finally weakening and pulling back. Now, whether or not we turn back up again, I think will have a lot to do with the dollar. And I've been talking a lot about that. But you can see everything else kind of staying right in the middle. Now I'm going to pull out energy. And the reason I'm going to do it is just to try to make the other ones, that gives the other ones more room away from the center so we can kind of follow what's going on there. So we're going to ignore energy. So this takes us back to November 9th. And you can see, and I'm going to do max here so we can fit everything on. But you can see many of the groups are over on the left side. We got industrials, materials, consumer discretionary, technology, and communication services over on the right side. But now the news is out. And as you can see, now we've got financials, which were lagging, turning up, communication services, and then watch industrials as well. Industrials will eventually turn back up. Here comes industrials right here. Let me focus on industrials. Let's show that again. So see how we go down into the weakening? And then just as we're getting into lagging, look at that turn back to the upside. That happens quite often. That rotation, when you're a leader, you just temporarily lose relative strength, or you temporarily lose momentum. You still stay pretty good, solid on a relative strength basis on the right side of the chart, and then turn back up. And that's when the momentum begins to build back again. So where we are right now is you can see real estate's doing well. We've got materials, industrials, communication services, and financials. Those are the ones on the right side that are showing some nice relative strength. Now you got a number of defensive groups that are moving up, but they're in the improving. They haven't crossed over. Personally, I don't think they're going to. I think you're going to see them roll right back over into the lagging. That's what I believe. And I think you're starting to see technology and consumer discretionary move back up. We'll see whether that continues. But anyway, I wanted to give you a little different look at how you can compare what's going on in the market. All right, aluminum. So now I'm going to talk a little bit about industries. So in this industry analysis segment, I'm just going to go through a handful of industry groups that have been pulling back and could be creating some nice opportunities. Aluminum, one of the strongest areas of the market until we put in that gravestone doji right there. That is a topping type of a candle, and it certainly served it as a top. We went back to the 50. We started to bounce, though, so we could see aluminum doing a little bit better at this point moving forward. Another area within the materials is the specialty chemicals area, also topping back on May 10th with a bearish engulfing candle. And we've been moving down. I think you should see some pretty good support here, maybe down around 1240. We've gotten down close to that level. I think probably we hold around that level. Watch the 50-day, which is just below that level as well. Containers and packaging, also in materials. You can see big move up, May 10th, the top, and we've come back down. I'm looking for maybe a 50-day test here. I think we'll probably hit some support if we get down close to that 520 level. Then we've got, I'm going to move to the financials, the DJUSIP. This is property and casualty insurance. Also, notice that high on May 10th. That's when we started to see some short-term rotation back over into other areas of the market. So nothing wrong with what's going on here. It's just your normal rotation. So continue, to watch these areas that have pulled back, because I think they're probably going to turn back to the upside, especially the financials. That's an area I really want to pay attention to. I'll give you one more here, and that is the automobiles. The reason I wanted to talk about autos, you see this low we put in March, that was a lot of panic selling, high volume. We went down and essentially put in a double bottom, and now we're starting to move back up. Look at the volume pickup as we get back through the 20-day EMA. This is a positive sign for autos, especially if we go back down and we test that 20 and then take off again to a new high. That's what you want to look for in terms of strengthening momentum. So when we were in an uptrend, that 20 days served as pretty good support until we began running out of momentum. Then we would sideways consolidate, and then we'd break out and we'd do it all over again. Here, what we were doing is going down, failing at the 20-day. We did do a little sideways consolidation, went down again. We got an equal low now. I think we're going to bounce from here. I do not believe we're going to take out that low on autos. So I think this is an area where you could begin to dabble, especially on pullbacks. All right, one more on the positive side. Clothing and accessories. So this is in the consumer discretionary area. I'm sorry, I'm still battling with some allergies here in the spring. All right. So clothing and accessories, I think probably has bottomed. I mean, if you take a look at some of the lows here and draw a trend line across, I think maybe we bottomed. We need to get through both these moving averages. So let's kind of watch to see if we can do that. But I do like the action here over the last few days on this group. Now, moving on to a few groups that I think are starting to show some really nice signs of potentially breaking out. Look at aerospace. Equal highs, rising lows, ascending triangle. Breakout much above where we finished on Wednesday, I think would be really bullish. Close above 1600. We haven't been able to do it. So that would be a really good sign for this group. Let's see if we can do that on Thursday. Then we'll go into medical supplies, DJUSMS. Look at all the tops here, top back here. Once again, equal highs, rising lows. This is a longer period ascending triangle, but I think the medical supply area looks good. You get a definitive breakout above 1400, that would be very bullish. Then let's move on to biotechs. All of these highs up at 2750, trying to get through. A breakout there would be very bullish as well. All right. Let's keep moving. Got a couple more segments here and then we'll wrap up. I want to go through earnings. So let's talk a little bit about earnings. NVIDIA reported after the bell. Easy beat on the bottom line. Stock was trading down about 1% after hours, though. I just think it's in a sideways consolidation mode. Rising 20-day is where I would look for some support. If it bounces off the 20-day, I think we're in an uptrend. If it were to go back down below the 20-day, then I think this sideways consolidation continues. Snowflake reported. Not a good report here. Stock's been trending down, not really looking very good. They missed on their earnings. They had a loss of 24 cents. Market was expecting a loss of just 16 cents. And then they lowered their revenue guidance. They lowered their guidance going forward. Not good action. Stock down 3.3%. We'll see whether or not we can hold the 20-day. If we hold it and can break out, then I think probably the worst news is behind the company. But if we go back down below those moving averages, based on this lowering of guidance, I'd be careful. Sorry, I think I'm about to lose my voice, but we'll try and push through the last couple minutes here. Workday reported they beat bottom line 87 cents versus 73. And we have gone through the 20, but we're down about 1% after hours. So let's see if we hold that 20-day tomorrow. A really solid report came from Williams-Sonoma. This is one of our portfolio stocks. $2.93 earnings. Expected $1.85. Stock was up 3% after hours last time I looked, around 176. So still not breaking out, though. We need to get a close above 190. So I think right now, anyway, we're still in this sideways consolidation mode. Let's see what else. Maybe do just a couple of more. NTNX. So it did beat 41-cent loss versus 47-cent loss expected. It's been rising last couple of weeks. Stock was down 3% after hours. So maybe that rising 20-day comes into play there. Last one, let's take a look at NXGN. They beat the company came in with earnings 21 cents versus 19 cents. Had a nice day on Wednesday, but giving it back after hours. Stock down about 3.7% after hours. $18, we're going to kind of watch that level, maybe $17.75. And then to the upside, we want to get a breakout above 19. This stock has been in a very, very narrow range for the last couple months. So we'll see if we can get a breakout there. All right, last thing, let's move into the three you must see. First up, PPC. Now, I wanted to point this out because, again, one question that comes up all the time: when do I sell? When's a good time to sell? Well, if you're a long-term buy and holder, this maybe not work. This probably wouldn't work for you. But as a short-term trader, when I get any kind of a false breakout like this, back on May the 18th, see that move above 26? I mean, we had a breakout, no doubt about it. We had an intraday breakout, came back down, failed to hold it. When I see that, I'm normally thinking top, short-term top. And that's what we saw here with PPC. So just be careful when you see those false breakouts. Next up is Molson Coors Brewing, TAP. I just wanted to point out the two reversals here. This reversal at the top, shooting star off of an uptrend. Got to be careful when you see those. And then a hammer off of a downtrend, right at price support. Let me annotate this for you for a second. But there was your high. Here was your breakout, increasing volume. Went down and printed a hammer right on support. That's always a good sign. Nice breakout. So we're sideways consolidating now on this stock. And last stock is Costco, COST. Once again, false breakout. Look at the stock rising to 390 back on May 18th. That cleared the early December high. We had a breakout intraday. We failed. Next day, right back to the 20-day moving average before reversing, coming back up, and now trying to break out again. Another failure, though, and volume just kind of so-so. I mean, this may top again on Costco. We'll have to wait and see if we can continue to hold that rising 20-day. Eventually, I expect to break out here. And when we get a breakout, the volume's heavy, that would be very bullish. A move through 390 with increasing volume would be a very bullish breakout for Costco. All right, that is it for me today. Appreciate everybody tuning in. I'll be back next Monday for your next Trading Places Live over at earningsbeats.com. So please join me there. Everyone, have a great Thursday. Enjoy the rest of your week, your weekend, and I'll see you next week. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.